Friday, October 21st, 2022, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how the Tories are fiddling while London burns. So things are changing so quickly these last weeks that I make a video, for example, and then half an hour later something changes. Yeah, it's been crazy, and that's a bad symptom about what's going on in the political establishment in the UK, in the financial system, monetary system, and that's what we're going to look at today. And before we go deeper into what's going on in the UK and London, I'm going to talk about a couple of books that I've recommended many times. Of course, many of you bought it already and have read it maybe more than once. But we get new subscribers, of course, every day. And I think these two books, and I read them many, many years ago, even before the '08 crisis, have helped me understand what's going on in the world of economics, of money, of politics, and it's helped me prepare for what's coming and what's here already. Of course, looking back at history is very helpful because most people think the world moves in a linear fashion, that we'll never make the same mistakes as our forefathers, and we're always going to get better. And I think that's a wrong way to look at human nature and the world. Yes, of course, things don't repeat exactly, but they rhyme, as the old saying goes. So yesterday, when Liz Truss resigned, I thought to myself, well, the political situation in the UK is more chaotic and disorderly than even during the Weimar Republic's first few years, which was 1918 to 1923, when we saw the culmination of monetary, economic, and political mayhem with the collapse of the Reichsmark or the hyperinflation, the Weimar hyperinflation. I thought, wow, this is getting crazy here in the UK, and I think it is. So that's why I recommend When Money Dies by Adam Ferguson, which is kind of a second-hand account, of course, of what happened in Germany during that period in the early 1920s. So I highly recommend that. And it was chaotic, of course. I've spoken about all the symptoms that lead to currency collapse. And usually it's to do with a huge crisis. Of course, in 1918, Germany had just lost World War I. They were heavily indebted because the German government did not really fund its spending during the war with taxes. They borrowed a lot. Sounds familiar. And of course, the Kaiser abdicated towards the end of the war, and a new republic was created out of the ashes of the German Empire, which was the Weimar Republic. Politics was chaotic, as I said. I guess one thing we haven't seen here in the UK is political assassinations yet. But we saw a lot of that there then. And yeah, a lot of trouble. And I thought yesterday, this is just like Weimar Germany, if not worse, the instability. And of course, we've got all the debt that started accumulating actually in 2008. That's where it really took off. And in Weimar Germany, it had started into 1914. So it took about 9 years for it to culminate in Weimar Germany. Right now, it's taking a little over, I would say, 13 years if you go back to 2009. And the salvage of the system that the Bank of England and the Treasury had to organize. So I think we're getting close to something. I don't know. As I said, things don't happen exactly the same. And the other one, the other book is Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended by Andrew Dixon White. And this, of course, is the recounting of what happened during revolutionary France in the 1790s, 1790 to 1796. And they had the same problems as the Germans, a lot of debt, political instability, the abolition of the monarchy there, the chopping of Louis XVI and Marie Antoinette's head, of course, reign of terror, inflation, of course, rising cost of living, the hiding from circulation of sound money, of course, and of course the experiment with money printing, the assignats, which is very similar, of course, with the Reichsmark, which is very similar with what's going on now. So now to why I think the Tories, and I would say actually the whole political establishment in the UK, they're so determined to look after their own selfish interests. Each politician, it's all about them. It's all about, I'm going to do this. And of course, it's nothing about really serving the public. But the other thing I would say, and I don't get involved too much in politics, but from afar, I can sense what's happening. I don't think there's any leader out there anywhere, be it Labour, Conservative, Liberal Democrat, or even Nigel Farage, who is capable of cleaning up the situation, because the situation is too far gone. And if one leader tries to clean things up, they'll get, there's no appetite for real change. And Liz Truss tried a little bit of change, and look what happened to her. So yes, it doesn't bode well. And why do I think they're fiddling? Well, because the situation is getting worse, and we've had some concrete data come out today, and that's the public finances for September of this year. And just keep in mind that it didn't really all happen in September. The data, the public finances, it's been a culmination of what we've had in the last few years. So it's probably going to get even worse, because since the middle of September, with gilt yields spiking and the pound going lower, things are going to get a lot worse. And this shows that it's not just Liz Truss's mini budget or Kwasi Kwarteng's mini budget that was what's caused the whole problem. It's something that, as I've said, started probably 2008, 2009. Just like the German problem in 1923 didn't start in 1923. It started probably even a little before World War I would say. So let's just quickly go through this fresh article. UK government borrowing jumps to 20 billion a month. Well, in September, that is. Figures come in well above expectations as high interest payments bite. Higher debt interest payments pushed UK public sector borrowing up last month to much higher levels than economists were expecting, laying bare the challenges facing the next Prime Minister. Public sector net borrowing was 20 billion in September, 2.2 billion more than in the same month last year. And the second highest September borrowing figure since monthly records began in 1993, according to data published by the Office for National Statistics on Friday. The figure was much larger than the 14.8 billion forecast in March by Office of Budget Responsibility, the UK's official watchdog, and was also higher than the 17 billion forecast by economists polled by Reuters. So to blame Kwasi Kwarteng for this is totally ridiculous. You should blame Rishi Sunak for this because he's been chancellor most of the time this year. Yes, he resigned a couple of months ago, but he's planted the seeds for this kind of data, and now he's supposed to be the savior. The guy who borrowed hundreds of billions, of course, through 2020, 2021 to keep people at home doing nothing for 240 days. Interest payments on government debt rose to 7.7 billion in September, 2.5 billion more than in the same month last year. Higher interest payments reflect the rise in retail price index, to which index-linked gilts are linked. And this is not even taking into account new gilts that are going to have to be issued at higher rates. So it's not just the index linked. So I think it's going to get worse. James Smith, an economist at ING, said that from the perspective of gilts, all investors really want to see is a credible fiscal trajectory from whoever takes over as prime minister next week. I say good luck with that, James Smith. Central government receipts were 71.2 billion in September, which was 7 billion more than in the same month last year, thanks to higher tax receipts. However, higher debt payments pushed government spending to 79.3 billion, 5.8 billion above the same month last year. So again, this is all Rishi Sunak. September borrowing figures do not include figures such as the universal £400 energy bill rebate and the energy price freeze that will add to spending from October. These could significantly raise borrowing for the rest of the year. So there you go, Mr. Smith from ING. So what's the solution to reining in government spending? Well, I would say the first one is for the Bank of England to allow the gilt market to trade freely. Yes, pensions, defined benefit pensions would have imploded a few weeks ago if the Bank of England hadn't done QE. And unfortunately, that's the way things need to go. If we are ever going to discipline government and push government to stop spending and borrowing like it does. And you might say, well, that's heartless. All these private pensions, defined benefit pensions would have imploded. Well, I'm sorry to say, the people who run these schemes, they should have thought first before they use leverage. And the other thing as well, the Bank of England hasn't helped, of course, with its policy since 2008-9 of zero interest rates and QE. So I'm afraid they're going to keep inflating because there's no political appetite for pain and for doing the right thing. And yeah, that's the only way to get things back to some semblance of fiscal rectitude, is to allow the market to set rates. And that will force government very quickly to stop spending. But if the government keeps getting bailed out by the Bank of England, and Andrew Bailey did that in 2020, 2021, he said he was just stabilizing the markets. No, he was doing debt monetization through the back door. That's what he was doing. And this is why we're in this situation. So, unfortunately, as I said, the political class, or the Tories, are fiddling while London burns. And I don't think anything is going to get any better. The only way it's going to get better is when it all implodes. and how that will happen, I'm not too sure. It will be some kind of combination of a deflationary asset price collapse and the collapse of the currency. I don't see any way out. So with that, let's quickly look at where the markets are this morning. It's 8:25 a.m. London time. So we've got spot gold at 16.26. It's down about $2. High's been 16.30. The low has been 16.17. Yes, the paper gold price has been frustrating. Yes, the dollar's still relatively strong. Well, very strong by default. I mean, when the yen drops 30% in less than a year from like 114 to 150, the dollar goes up. Is it any wonder the dollar index is strong? And I don't think the pound's going to get any better either. So let's keep going here then. We've got silver at 18.55, down about 10 cents. Low has been 18.41. The high's been 18.78. The Dow futures up 44. The NASDAQ future is down 13, and the S&P is up about a point. The FTSE is down 10 points. The Euro Stoxx 50 is down 33. To the currency, so sterling is at 112.15. That's down about 0.2%. It's been as low as 111.73 overnight. The euro is up slightly at 97.98. Dollars up against the yen at 150.36. The high's been 150.47. And I heard that the Japanese central bank, the Bank of Japan, has had to increase yield curve control because the 10-year yield now, investors are trying to sell that bond, and it's creeping up above 0.25. And they can't have that, of course. The Mr. Kuroda-san from the BOJ. So the dollar is up slightly versus the Swiss franc, just above par. And the dollar is up 0.1 versus the yuan at 726.20. Dollars at 61.20 versus the ruble. It's up slightly overnight, but down from where we were yesterday, around 62. Aussie dollar is unchanged, 62.77. The dollar's up slightly versus the Canadian dollar, 137.70. And the Kiwi dollar is down about 0.2 at 56.68. To the general commodities, WTI crude is unchanged, 84.30. Brent is down slightly at 90.87. High-grade copper is down 0.2% at 3.38. U.S. nat gas is down 2.5% at 5.60. Let's quickly look at the government bond markets. We'll start with the UK gilt. The 30-year gilt is up 8 basis points. It's above 4%, 4.03. Yeah, it's still below the highs we've seen recently, about above 5.13. But compared to where it was last year, it's multiple times higher, of course. The 10-year is trading at 4% as well. That's up 10 basis points. And the 2-year is up 5 basis points at 361. So investors are not too convinced at the moment about the UK fiscal situation. Yes, it's improved, but not out of the woods yet. And the US Treasury market is very interesting. I spoke about it yesterday in length. And where is the trigger for a crisis? Well, maybe the crisis already started somewhere in the financial system in the US or abroad, and we don't know. But it's getting worse. Right now, the 10-year is at 4.24. It's up just over 1 basis point. It did hit 4.27 overnight. And where do I think the Fed and the Treasury would get worried? Well, I think if we accelerate quickly through 4.5, there's going to be a lot of worry, and I think that's going to spill over into other asset classes like stocks and corporate bonds. So we'll have to keep an eye on that, of course. So if you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day, a great weekend. Take care. Bye.